everybody, and welcome to our live today where we're going to be talking about how to make a profit in business. And I am joined by two gentlemen that know lots and lots about creating profit in business, and not just a business, but in multiple businesses. So we're joined today by Jason Avery and Tom Fleming. And Tom, I think you were going to start us off with this idea of how to make a profit in business.
Yeah, I'm waving to everybody. I'm having trouble with my camera today. But I think the first thing that we need to note is that revenues minus expenses equal profit. And just to get us all on the same page here, basic concept, but that is the basis of our conversation here. Revenues minus expenses equals profit.
All right, very cool. Yeah. I mean, yes, let's define profit. What is that? And I think a lot of times people would say, hey, if you want more profit, just get more business. What would be your thoughts on that?
Mine or Jason's?
Either one.
Tom?
Go ahead, Jason.
Sure. My immediate thoughts in this conversation are that, I come from a world of contractors, and often contractors are robbing from Peter to pay Paul. And usually the way they got into that situation is by the fact that they were a good tradesman, but maybe didn't quite understand the general principles of business and how profits are made. And absolutely, you have to know your numbers. It all starts with knowing your numbers. And then once you know your numbers, maybe we can manipulate the numbers a little bit and figure out how to maybe make a little more profit. But the main thing is I find that a lot of people operating businesses today are cash flow rich while being profit poor. They just don't know the difference. There's lots of money in the bank account right now, but we can't see that by the time I'm done with all these projects in the ground, 3.5, 4 months down the road from now, there wasn't any money left over for me.
Gotcha. So as you're watching here live, thanks everybody for tuning in. If you have questions or comments, please do put those in the comment section wherever you're watching this, whether it be Facebook, LinkedIn, or YouTube, and we'll pop over to those in a moment. And so, gentlemen, what tips do we have? So we've got this idea of, okay, it's got to be more than just get money because we've got that revenue. So yes, increasing revenue could maybe increase our profits, but there's a lot of other stuff going on. We want to make sure we've got that money. So either Tom or Jason, what are your thoughts on, how do we increase that profits? Not necessarily increasing the money we're taking in, though that's a beautiful thing too.
Yeah, let me first comment on your question, Jason, a moment ago, Tiffany, where you asked or proposed, hey, if we're not making money, let's just make more. Jason, your background is in the construction field. My background is in the manufacturing arena. Very similar processes, if you will. But you have to know what your fixed expenses and your variable expenses are. Not in terms of necessarily at this point in the conversation, the amount. You have to know which categories of your expenses are fixed versus variable.
And if somebody's watching this and they're like, I don't even know the difference of fixed versus variable, Tom, can you expand on that for us, which is probably what you're going to do anyway?
Sure. Fixed expenses would be things like insurances, where it doesn't matter how many widgets you make, your monthly insurance bill is going to be the same, or rent, or if you lease equipment. Those are all fixed expenses. Variable expenses are going to differ based upon the amount of volume that you're executing. For instance, in Jason's industry, his variable expenses are a lumber, and because that is dependent on how many orders he gets, while his equipment expense in his shop to make cabinets are all related to fixed expenses. And what I really want to note here is that if you're making widgets at a loss, meaning your variable expenses are higher than the revenue that you're making more, producing more, selling more is actually putting you further in the hole, if you will. So that's an important part of this conversation, if you will, which is why I spend so much time in my coaching practice working with professionals on financial literacy, given that a lot of my background is in how to set up a business from a financial perspective.
Gotcha.
So Tom started on the bottom half of the financial statement with the expenses, and that's a good place to start, because if you don't know what to charge in sales and you charge the wrong amount, as Tom said, it doesn't matter how much you sell, you're going further and further backwards. But if I start at the top side of that financial statement with what you mentioned, revenue, I'm going to break that down into smaller pieces. The equation for revenue is the total number of leads that I receive every day, chances to go try and make a sale, times the close ratio. That will equal the number of them that I actually sold, times the average sale. If I put them all together, divided by the number of sales, what is the average sale that I bring to the table? And when you put those three things together, that's where we get our revenue. That's the total amount of money we put in the bank account. That includes the cash that you took under the table. That includes, all the money that is brought in for projects, and then subtracting those expenses. And I break the financial into two different parts. You got the cost of goods, which is the things that are specific to that one job. I bought 10 2x4s to build the wall at their house. And then you have the overhead expenses, as Tom put, more the fixed items. Like, again, I had to pay for general liability insurance just to be in business, and no matter which project it was that I was working on. So, we can't just wish the bottom number to be profitable and more profitable and more profitable, but can we control the bite-sized pieces one at a time? Can I make small gains in each area a little at a time? And little gains on each item of the list result in big gains at the bottom. So just one example, leads. Can I get more leads? Sure. Go do more networking. Run an advertisement, and get out to an expo or a trade show. Put yourself in the room with opportunities. You can easily get more leads. Closing more of them. Can you improve your sales strategy, your pitch book, make it a little neater, include some more pictures? Can you run a sale that makes people want to buy this month and closes some deals more than you would have closed otherwise? We can improve that number. And then the average. What projects are you willing to take and what projects are you not willing to take? Do you do those the small things that you probably make no money on because you hope that later you might get something bigger? Or do you, weed out some of the less desirable, smaller ticket items and start focusing on the bigger, better opportunities, and thus increasing your average sale? So those three things alone increase the revenue. And then we got to go back to Tom's part of the sheet and start controlling the expense.
So it looks like we're like here from top down, from bottom up, to hopefully meet in the middle on making more profit. What would you like to add to that, Tom?
Or instead of meeting in the middle, the idea is, again, revenues less expenses equals profit. That's your income statement. Your accountant, your bookkeeper should be keeping you up to date on this information in terms of what your actual results are. But we've got to plan to make a profit. We've got to plan to make a profit. And there's a concept called a pro forma income statement, which in essence is part of your business planning, where you're going to project over the next year, preferably in monthly buckets, what are going to be my revenues? What are going to be my expenses? And you want to pay really close attention to what is my expenses around salaries as a percentage of sales, equipment as a percentage of sales, raw materials as a percentage of sales, insurances as a percentage of sales. Through the years of putting together pro forma income statements, looking at your income statements, you're going to get better at this form of goal setting. And that's when you're really going to be able to gather insights in terms of how to tweak your business activities, as Jason has alluded to, of, oh crap, I need more revenue, we need to offer a special, or we need to do more networking. Or you look at your expenses to make sure they're in alignment with your projections, to possibly have to go back to your vendors and say, hey, I need a little bit better pricing. Or to go back to the customer and well, go back to the way you're quoting jobs, I should say, and enhance your revenue so that you can cover your expenses, which is something, Jason, that every business owner over the last 6 months to a year is going through. With the inflation and the scarcity of raw materials, we've all had to reflect on the fact that our expenses are going up, and we're not going to make any money if we're not taking into account for that.
Yeah, and I think it was interesting. One of our Asentiv Mastermind community members, Shawn Yesner, who was unable to be here with us today, I did want to give him a little shout out because he actually has a book, and I've put the information here on the screen. You can go to bit.ly/SY, which stands for Shawn Yesner Debt Free. He talks about how you can reduce your debt in less than an hour. And it's not like you can get rid of all of it, become debt free in an hour, but some little easy things to do and some tips like, can we get a lower interest rate on our credit card? Can we get a better, pricing from our vendors? I remember back in the day when I was in the promotional products world, we had our favorite shirt vendor, and we're like, can you give us what we call next quantity pricing so that we could get, the lower cost without having to buy more. And so sometimes we can play our expenses on that. Sometimes we have to think about how do we get rid of the debt? How do we kind of deal with that? In our business. And there are definitely some fluctuations, as Jason knows about, of late in the construction industry.
Tiffanie, it's definitely, again, these are educated decisions we're talking about when it comes to making profits. And we have to, as Tom put it, know that we're going to be able to make the profits, and then have a report card within that financial statement whether or not we made those profits. But having the strategy, it all starts with having the information. So, if this is, day one in this conversation for you and you're early in this process for making profit in your business, the first thing you do is start tracking everything right now. You need to track the number of incoming leads, and you probably need to track the sources at which they came from. Because if we want to make an educated decision about which advertising works and which advertising doesn't work or works less effectively, we got to know the difference. So we got to track that stuff. We got to know how many sales we're closing against those leads. And we got to know how much did we sell them for in total, because, sometimes it might start at a sale price that maybe gets added to as time goes. It's common in the construction world with the word change order. So, but knowing your numbers is the key to the first step in success with profits. Is you got to know where and how the money is going to be made, how much things are going to cost you, and it's the job is never done. You can't just set it up and then sit on standby, as very apparent in the construction world, prices and all the things that we've all heard about on the news. It's a moving target, and we constantly have to be aware of what the expenses are going to be, and we're going to constantly be trying to fight the wolves off the doorstep, maybe by renegotiating some terms. But if I know that I do $250,000 worth of this purchase every year, it makes it a whole lot easier for me to go negotiate with somebody else, another vendor, to say, hey, how bad do you want this $250,000 a year worth of stuff? Can you save me 10% along the way? So it's very, very calculated. Profits are just a mathematical formula, and we have to balance it so that at the end, it's a positive number, not a negative number.
I got to add something to this conversation that's a little outside the realm of what you were talking about, Jason, though very, very powerful. One expense that I want to talk about today that is so very important, and you want to be sure to include in your income statement, is your salary. I cannot tell you how many entrepreneurs I work with, and I look at their income statements to help support them with the idea of where can you enhance, where can you cut. And I say, what are you paying yourself? And they say, well, I'm really not paying myself. Please, please, please pay yourself, and work with your accountant to make quarterly tax payments, monthly tax payments, whatever you need to be doing. And if your business, you don't feel it's in a position to pay yourself, please, 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 Jason, I know you coach contractors. I'm working with a number of people in other industries. please, please, please contact us. If you're running a business and you're not paying yourself or you're not making a profit, we got to do something different. The definition of insanity is we keep on doing what we've always done. We're going to keep on getting what we've always gotten. And I don't know about you, Jason, but I run into so many solopreneurs, entrepreneurs that, just they're not paying themselves.
And if you take the advice of any good CPA, the general rule of thumb is the money that you're making should probably be at least 50% paid to you via salary through the business, because the IRS is expecting you to pay some employer tax. and I think that's why some people avoid paying themselves a salary, is trying to maybe see if they can skimp on some taxes. But this is the way business works. If you don't pay yourself, but you carry on a full-time job there, you create no value for your business. And I've always looked at my business as an asset that one day will be sold and it's worth some money. But it's only worth money if I can prove that I was making money along the way, by working there, getting paid a salary like a regular employee who works there, and then additionally making money in profit. And that's for being the business owner. And that's for, having many, many years of blood, sweat, and tears wrapped up into it. It should be worth something when you're all said and done with that. So Tom took the words out of my mouth. That is great. If you're not paying yourself, is it because you're trying to avoid taxes, or is it because you can't afford to? You're not charging enough. I find that so many business owners are trying to compete with the solopreneur. And there's a client base for them, but it's not the same client base that I work with, who wants a reputable business, who, does have to charge more because I have to pay a staff of people to, help operate the business and get things done fast and efficiently, on time and on budget. And there's a hazard to the solopreneur in that if any one job goes bad or belly up, it could be the end of business for them. In an organization that has dozens of jobs in motion at a given time, if a job loses money, it doesn't matter. The wheels keep turning, it keeps flowing, the job gets finished, and we can offset the loss of one, profits on one job by the other profits gained on the many.
And by the way, depending on the industry that you're in, there are benchmarked gross margins that you should be making in that business, benchmark profits that you should be making in that business. And you can research. For instance, many of us know that if you're in the grocery business, a grocery store is only making 1 to 2% of profit on an annual basis, but obviously they're selling so much in terms of revenue that profit can be significant. Well, every industry has a different financial structure, if you will. And if you're not sure, what should I be shooting for in terms of percentage of payments to me in salary and profits as a percentage of sales? Do some research. A gentleman who has impacted my life in a number of ways, probably about 20 years ago, he said, I don't get involved in a business opportunity unless I can position myself through salary and profits to make at least 33% as a percentage of revenue.
Awesome. Anything else, gentlemen? Do you want to add to this part of the conversation? Because you got something, Jason?
Again, and this is more industry specific, but for what it's worth, I find that a lot of contractors haven't taken the time to really, again, learn what the expense is going to be. They start every project from zero. They're constantly, let me get all my subcontractors to come out here and tell me what they're going to charge, and then I can present a price to you, my customer, for the whole package. But it takes weeks or longer to get prices and to really understand what we're getting into so that the customer can make some educated decisions about their budget and expectations. And so, one thing, we started many, many years ago is tracking, again, all of the expenses into one working document to make it very easy to replicate. If it cost $5 a piece last time, it should cost $5 a piece this time. If I get an invoice and I'm getting charged $6 a piece, I'm asking the questions, why? Why did it cost an extra $1 a piece? Oh, because you turned it sideways? Sure. Okay. I'm going to add another line item into that spreadsheet that says when you turn it sideways, add a buck. It just, this is not rocket science, but it's just tracking data and information and being able to replicate it. If you want to grow and scale a business, growing and scaling the profitability along with it, you have to be able to know where and how the cake is made. I need to know each of the ingredients and how much to use of each one of them to make that cake taste nice, whether I make a 12-inch, 14 or 16-inch cake.
Awesome. Thank you, Jason. So I want to switch gears a little bit with this idea of how to make a profit in business, because we talked a lot about the money and the expenses, but I think we also have to take into consideration sometimes the time that's involved. And this could be the time that's involved, travel time. This could be the time that's involved to actually do the job. If I look at a massage therapist who's like, well, yeah, it only costs me my time, and for an hour, I can do a massage for 6 bananas. I don't know how much you want to charge for a massage, but we'll go with 6 bananas. I can do that for an hour, or I could do let me teach a class on how to self-massage for 30 bananas for the hour, but I could put 5 people into the program. And so I think sometimes we also have to consider not only, what is the margin, but also what's the time that's involved, because maybe you don't make a lot on a product or service, but you make 5%, but it takes you 5 minutes, versus you make 50%, but it takes you 5 hours. And what are you taking away at the end of it? So I think sometimes we have to also consider, what's our time involved, and is it worth the energy and the effort? Sometimes it's like, well, it's just my time. And Jason, Tom, and I are all believers. Don't ever say it's just my time. Of all the resources that you have, your time is the most limited out of all of them, and it's precious. So we definitely want to make sure that we're doing profit, but are we smart in creating that? What are your thoughts, gentlemen?
I think you have to value your time in business. It's part of your overhead. I talked about fixed versus variable expenses earlier, and it's part of the expense of your business. And I think you have to take into account. I get so upset at contractors. Sorry, Jason. But the irrigation guys, the plumber guys, just to come into the driveway cost me $60. And that upsets me so much, but I understand at the same time, because they need to be taking into account the fact that it took them a half an hour to get to the job. They have vehicle expense to get to the job. They have gas expense to get to the job. They have insurance expenses to get to the job. All of that needs to be taken into account. And though that upsets us as consumers so much, it's part of the cost of people doing business that gets passed on to us as consumers, and it's got to be taken into account in your business. Value your time. And if you value your time at $100, $300, $500 per hour, please get out there and hire somebody that can do some of your $15 or $20 per hour tax, so you can leverage tasks, so you can leverage your time.
I was going to say something similar, and I was going to say, like a lawyer. Lawyers are commonly going to value their time anywhere from $200 to $500 or more per hour. So if the lawyer is standing at the fax machine running faxes through, and they could have paid somebody $15 an hour to do that task, how many hundreds of dollars an hour are they costing themselves while completing that task? And again, it's true for. And when you get a larger corporation and you got different departments, and production people often look down on salespeople like, oh, they're just spoiled rotten because they make too much on any one job. They get a big percentage, for the jobs that come to the table. But what you have to consider is that only 15% of the people that they actually go out and see and talk to and run a tape measure on are actually going to see it all the way through to contract. So 85% of their time was wasted prior to that 15% where it was effective and they're getting paid on. So it's just the balance of things. And this is common in business. It's what business is all about. And if you understand these concepts and you can put these numbers on paper, write them down, track them, preferably in a spreadsheet or something that you can do some more automated math with. But having that information available to then also carry over to your bookkeeper or CPA as it ties into your QuickBooks. Hopefully everybody's running a QuickBooks account on their business and they can actually know where the money goes. And the shoebox full of receipts, that doesn't work for managing businesses.
Heck no. And by the way, everything that we're talking about here today works for your personal life as well. As many people know, I've transformed what I'm doing with respect to business. And so when I started to pull back a little bit, it wasn't last year, but the year before, I literally tracked every single expense that my wife and I had in our personal life. Did we buy a cup of coffee? Did we run out of milk and go to the store? And I categorized those expenses for our personal life so that I had a budget or an idea of what it is that we spend on an annual basis. Food, shelter, so on and so forth. Because you got to run your house like you run a business if you're smart.
All right, gentlemen, it has been a pleasure today talking to you about how to make a profit in your business. What I'd love to do to wrap us up is just to come around, tell us who you are, what you do, how do we get in contact with you, and if there's anything else you want to add for the viewers out there who have been many, though they've been quiet. Apparently, you're answering all our questions for them. We haven't had any questions come through, so that's awesome. But tell us who you are, what you do, how do we contact you, and anything else you want to share as we begin to wrap up.
Tiffanie, I'd also like you and Jason and I just to share what is that one nugget that people absolutely, could take away today? What's that one thing? Just a great summary of today's conversation.
Okay, you can start us off, Tom.
Oh, okay. My name's Tom Fleming. I've been an entrepreneur since 1996. I've had a number of business endeavors. Currently, I work closely with Tiffanie and Asentiv, where we support entrepreneurs with making more money, saving time, and having fun by helping them grow their business through referral-based marketing skills and techniques. I also, within that framework, do some coaching of some business owners here in the local area, looking to also increase my portfolio of clients. And I basically find out what their needs are and utilize my own business education and experience to help them reach their goals, impact what they want to accomplish with their family and their community. And I think the one nugget that I really love people to walk away with today is that idea of creating a pro forma income statement for over the next year, broken down by month, so that you can monitor with the help of your bookkeeper and accountant. Are you on track to make a profit this year? And if not, what can we do to take action now rather than wait to the end of the year, find out we operated at a loss, scratch our head, and do the same thing over again next year?
Thank you. Jason?
So I'm Jason Avery. I own Avery Construction, where we remodel kitchens and bathrooms. We build new room additions all over Tampa Bay, primarily in waterfront property or golf course front property. We're going to take a place that has an amazing view, and we're going to make the inside look as good as the outside. We averyconstruction.com and is the way to reach us regarding any projects coming up. I'm partners in a company called Designer Cabinets, LLC, a factory based out of Clearwater, Florida, that supplies contractors and designers with custom wood cabinetry, frameless European style cabinetry at wholesale prices, fully accessorized, any color, shape, or wood species you can imagine. DesignerCabinetsLLC.com is the source for that. And if you're a contractor that's struggling, either you're not making enough sales, you're not busy enough, or you're making a ton of sales and you're not making any money, you're not making any profit. And those are things that I help coach contractors through. Let's stop robbing from Peter to pay Paul. And that's construct-success.com. You can also find my book on the topic, Constructing Success, the Blueprints for Referral-Based Business on Amazon. But the golden nugget, I love what Tom said, and pay yourself a salary. And then furthermore, what came out of his golden nugget, which was another golden nugget, again, is the reminder that take what your annual goal is and break that down into bite-sized pieces. What should it be per month or per week even? What could it be per day? What are our daily goals that are going to live up to the bigger goal? And so we know, are we running ahead or behind, and what we're going to have to do to put the train back on its tracks.
And I'm Tiffanie Kellog. My goal is to help entrepreneurs make money, save time, and have fun, mainly by getting more referrals. And we do that inside the Asentiv Ignite Your Business program. So if you're like, look, I need more clients to have more profit because I don't have any clients yet, or I need more, I get you on some of that. The link is here on the video. And I don't know that I necessarily want to call this a golden nugget because it's kind of one of those kind of topics for me. However, I find it's very important. As we started the conversation and throughout the conversation, you keep hearing us mention knowing your numbers, tracking, what are the expenses, what are the costs, what are the goals. And so while tracking isn't sexy to me, it's not something that just lights me up from a purpose of, yay, spreadsheets. I do say yay, spreadsheets, because they give you the information that you need. And if you're guessing on what are my expenses, it's super easy to say, oh yeah, I'm making like a 40% profit. And then you go in and like, oh, I'm losing 20% every one of these widgets that I make. So my nugget, my suggestion is do the tracking, pay attention to your numbers. And if you're not a numbers person, and again, I laugh. I mean, I have spreadsheets that do the numbers. Yeah, hire somebody. If it's not your thing, hire somebody to do it. That's going to be some of the best money that you spend because you'll know what's going on, and it'll give you the control that you need for the success and the profit that you're looking for. So thank you so much, gentlemen, for being here today for how to make a profit in business with our Asentiv Mastermind community members. We'll be back every couple of weeks with another video to help you have more money, more time, and more fun. Happy networking, y'all.